This is the story of Jesse Livermore, a man who had very high highs and very low lows. Today, I will give you guys a brief story of his life, his important moments, his biggest moments, and his lowest moments. And then we will get into the reasons why he wasn't as successful as he could have been, and also the reason why he ended up the way he did. So if you're interested in knowing what happened to him at the end and who Jesse Livermore is, stay tuned. Jesse Livermore, a name many of you might not be familiar with. This public figure made history as one of the best stock traders in the world, and he made his fortune before many of today's speculative traders did. There are many lessons to learn from this man's life story, such as what brought him success and what led him to his demise. It is important to keep in mind that even though this gentleman did very well for himself in the stock market, he did not end up having a happy life. But to understand what led to this unfortunate ending, we must uncover the lid which encloses his journey in this world. He started his career at the young age of 14 years old. His first investment took place in a brokerage firm in Boston. In this place, Livermore started to create a reputation for spotting stock patterns, which earned him his future nickname, the Boy Plunger, due to his success in what was called bucket shops. During this time, he was a board boy, a job position held by teenagers during the 1900s. It entitled him to switching the prices manually on the boards for the traders to be up to date. Since Livermore happened to spend many hours in Boston Stock Exchange, changing these prices, he was able to keep a close eye on stocks and was able to create a successful strategy after many months of trying to predict stock prices without investing. In the early 1900s, Livermore moved to New York and dedicated his life to trading by continuing use of his strategy he developed as a teenager. Jesse Livermore was so successful during the crash of 1929 that at his peak, his net worth was about $100 million. However, things did not work out perfectly for Livermore. He had many ups and downs and faced bankruptcy on several occasions. Still, he managed to get himself out of every sticky situation and bounced back with more wealth than before. In 1940, Jesse Livermore wrote his first book called How to Trade in Stocks. In this book, Livermore provides specific details about the methods that culminated in his success. In short, Jesse Livermore's strategy for success was to buy during a rising market and sell during a declining market. He also recommended that leading stocks are the first ones to break a trading range and to achieve top prices. Finally, he advised investors to draw half of their profits and set aside for reserves. This might seem like simple strategies in a world where there is AI integration and quantitative economic stock picking strategies. But these simple rules are followed by every trader, and in its time it was groundbreaking. Unfortunately, regardless of Livermore's success, he ended up taking his own life due to personal issues as well as his financial ups and downs. This sad conclusion to Livermore's interesting life story suggests an important lesson that we can learn from his mistakes. Trading for a living can be very unstable. An experienced trader like Livermore faced bankruptcy multiple times, even after having $100 million at some point in his career. There are many other ways to make money in the stock market, such as investing in the long run, investing in ETFs, mutual funds, and blue chip stocks.